Hi, how are you? Welcome back to our new video. So today we're gonna talk about 7 important basic things that a forex beginner should know. So we're going to discuss them in details so that you get to understand how things work in forex market and how things should be done and ways in which you should carry them out. So number one, we are going to talk about first have education on what forex is all about. You have to know what forex is all about, different types of currencies that are being traded in forex. The other thing, you have to know the major currencies, the minor currencies, the different types of currency pairs. Remember, we have 3 types of currency pairs. We have major currency pairs, minor currency pairs, and exotic currency pairs. We said that major currency pairs, these are pairs that are paired to USD, and minor currency pairs, any other pair that is not paired to USD, those are minor pairs. And exotic pairs, these are pairs that come from emerging economies. For example, we have South Sudan dollar and Zimbabwean dollar. So you have to get the knowledge first on what is happening in forex, because you don't want to invest in something that you don't know its basic operations and how things are being run inside there. So you have to be well equipped so that you invest properly on something that you have knowledge about. Number two, you have to have a plan and you have to stick to it. You have to stick to your plans. If you use smart money concept, you have to stick to that plan. If you're a person who focuses on break of structure, things like support and resistance, you have to first know what is support and what is resistance. Remember, we said support is that lowest point at which the price fails to go below, and resistance is that highest point at which the price fails to go above. So whenever the prices are breaking these points, you have to know when to execute your orders, either aggressively or conservatively. Now you have to have that. Number three, you have to practice, because remember, practice is the main thing that drives forex market. Forex market has got so many factors that affect it. So the moment you keep on practicing each and every time, it makes you understand, it makes you have a proper knowledge on what's happening there, and that will give you good experience on how to make profit. Whenever you make losses, you also know when you know where you went wrong, and you learn from it. You have to take it slow and steady. Forex market will never make you rich quickly. Yes, it's a margined market, and it's a leveraged market, and sometimes it can give you good profit, and sometimes it can as well make you big losses. So you have to take it slow and steady. Whenever you take it slow and steady, accept the profits that the market has given you. Remember, those profits you didn't have those profits. Let's say, for example, even if you make $10, even if you make $100, you have to close that profit and take it home. Now you have to take it slow and steady, and also you have to be very, very, very patient, because in forex market, if you don't become patient, at times you may execute orders very quickly and regret why you did that, because at times the market may go against your execution. And number four, you have to know your limits. You have to know your limits. Remember, in forex market, you don't want to invest the money that you're not willing to lose. First, you have to have that good capital that you're willing to lose. Whenever the market doesn't go the way you want it to go, if you make a loss, you don't hang yourself. You have to be in a position, to have that money you're willing to lose. And also, you have to equip yourself with good risk management strategy for you to get to understand how risk to reward ratio works, because you don't want just to execute orders and don't put stop losses. The moment you don't put stop losses, you're putting your account at a risk of being stopped out. Know your limits is, I think that's number 5. I misquoted it. Number 6, you have to manage your emotions properly, because anything involving money, so many emotions are involved. So you have to manage your emotions properly. And whenever you're making profits, know that whenever you're making profits, you're happy, and whenever you're making losses, things are not on your side. You have to maintain calm at every situation, whether you're making profit or whether you're making losses. And number 7, and lastly, you have to be open-minded. Don't just stick to one plan. The moment you stick to one plan, the market at times never go the way your plan anticipates, because the market is affected by so many factors. One of them, we have fundamental factors and the rule of supply and demand in the market, and smart money concept. So these things really affect the market, and you never know where the market or what angle the market may come from. So you have to be open-minded. You have to question what the market is doing, not just sticking to your plan whenever you see the market, let's say for example, has broken your trend line or support resistance, and you just want to execute either going long and going short order. So you have to question yourself whether this is a false breakout or this is the real breakout. So you have to know that. So these are 7 important things you have to know when you want to trade in Forex.